G'day, Fools. I'm Scott Phillips, the Motley Fool's Chief Investment Officer here in Australia, and welcome to another weekly Stock of the Week video. Funnily enough, they're weekly Stock of the Week. Who'd have thought? Also, by the way, it's the Stock of the Week podcast. If you're listening to this on the Motley Fool Money podcast feed, thank you for doing that. If you're watching this on YouTube, my apologies for having to see my mug while you're listening, but hopefully it'll add some value to your listening and viewing experience at the same time. Fools, Stock of the Week is all about us bringing you behind the scenes, opening the curtain, pulling back that curtain and showing you a buy recommendation from a Motley Fool service. Now, when I do that, I need to give you the usual three disclaimers, so stay with me. Firstly, it's a buy right now. We don't know what's going to happen tomorrow or next month or next year. The analysts that appear on this series reserve the right to change their minds straight away or, as I said, in the course of time, as you would expect. When the facts change, it would be silly for us to hold to a previous view despite new information. So yes, it could change. We're recording this on the very last day of November 2021. If you're watching it meaningfully after that, just remember our view could have changed. Second thing, we are long-term investors. So we're not saying the shares are going to go up tomorrow or the day after or next week, next month, not even next year. We're looking at 3 to 5 years and beyond, and we'll measure our success and your success, hopefully, if you follow us over that same time period. And lastly, as always, we only give general advice at the Motley Fool, not personal advice. The difference there is an ASIC rule, which simply says we can only tell you what we think. We can't tell you what's right for you. That would be personal advice. And we don't have the opportunity to sit down with you and discuss your goals, objectives, and needs and all the stuff that goes into giving personal advice. This is general advice only. It's up to you to work out how and whether it suits your personal financial needs. So with that out of the way, let me introduce to you the man of the hour, Trevor Muchedzi. G'day, Trevor. How are you, buddy?
Hi, Scott. How are you?
Mate, I'm exceptionally well, thank you, mate. Always good to see your smiling face. And see, if you're listening to this on the podcast, you're not seeing Trevor's smiling face. So check out the YouTube channel while you're here. Trevor, we're going to talk about a business that I'm going to say I know a little bit about, but it's a relatively new ASX company. The company's name is BlueBet. Now, Australia is the home of betting agencies and technology companies, it seems. There must be a dozen. And half of them are owned by somebody or owned by somebody else, part of bigger groups, part of technology platforms. It's a really, really busy area. At the same time, when you see a lot of businesses in a particular area, it's also a good sign that maybe something's actually going on there. I think last time I checked, there were 485 buy now, pay later. No, I'm kidding. There are a lot of buy now, pay later companies on the ASX, and that tells you something's going on. I think it's fair to say there's something going on in the betting business. I will also say, mate, just up front, for your sake and for mine, we're not making ethical decisions at the Motley Fool on behalf of our members or our podcast listeners or our YouTube viewers as to what you think you should buy as an individual. If you don't like betting companies, that's completely cool. Listen anyway, by the way, because you'll get some insights into some things that Trevor likes about businesses, and maybe you can apply those to other companies. But if it's not right for you, that's completely cool. Same all the time, by the way, ethical or otherwise. If there are reasons why you kind of see or hear us say something and go, no, not for me, that's great. Knock yourself out. Do what's right for you. So again, we're not applying any ethical filters here. And by the way, even if we tried to, so many people have such different views on what ethics, apply to different companies. So it's just, we're not going to try and do it. We're going to make the investment call. Let you put it through your own ethical filters at home or in the office, wherever you're listening to or watching this. All right, so let's get past that. Tell me about this new business called BlueBet.
Yes, Scott. So Scott, I think you got it right in that Australia is actually the home of sports betting in the world. Actually, I think Australia is the highest spend per capita when it comes to sports betting and wagering.
Wow!
And on my last count, there were close to 39 licensed sports betting operators here in Australia. So exactly, there is something to the market. And BlueBet is actually like a relatively small company. The company was founded in 2015, and then it listed earlier this year on the ASX. But just to provide some context, within the Australian market, we do have Flutter Entertainment, which owns Sportsbet, and then we also have Tabcorp, which owns Tab. So those two are the giants within the local market, and they control something close to 70% of the market share. And BlueBet is a small player within the local market with something like 1.3% market share. But the investment thesis here that we are looking at is not about the Australian market, but rather is actually BlueBet entering into the US market, which is actually quite new. Right. And it's not quite often where we see Australian companies having an edge over US companies. But because we have been in the sports betting industry, especially in their home market, But because we have been in the sports betting industry for far longer than the US companies, so we do have Australian companies that have got an edge in that particular market. And this investment thesis is really hinged on that go-to-market strategy within the US market.
So, mate, obviously the US market, as you mentioned, it's a relatively new market. Vegas has been around forever. We all know Vegas. We all know. I can't remember the other. What's the other place? Is it Reno? There's a couple of big gambling areas in the US, a couple of big gambling cities, and that's always been there. Been there probably longer than Australians have been gambling, or maybe just as long. But what is new is if you want to put a bet on the NFL, on the gridiron game, you'd go to Vegas, you'd go to the floor of a casino, and you'd find someone to put the bet on. Sports betting, as you say, is now about to, maybe already is exploding. I guess it depends on where you want to put your frame of reference. But the very idea, all of a sudden, that individual states can and wanted to provide those, I'll say services in air quotes. You can make your own ethical decision about whether it's a service or not. But wanted to allow their citizens to place their bets in their home states. Makes sense, right? If you're in California or Delaware, you don't want people going to Vegas to bet. If you're going to bet anyway, you might as well bet here. We'll take the revenue. Thanks very much. That is potentially going to lead, or is leading, as I said, you tell me whether it's happening or about to happen, to an explosion of sports betting. And I think, as you say, that's the opportunity, right? We've been doing it for years. We know what's going on. We know how it's done. And all of a sudden, there's a market that is literally just opening up. And Australian companies look around going, hey, we could do that, right? Where is sports betting at in the US, mate? And what's the kind of medium, long-term view you've got of that market?
So just to give some context, right? So in 2018, slightly over 3 or so years ago, the Supreme Court in the US made a ruling to legalize sports betting, like you said, in every single state, right? So sports betting became legal in every single state. But then they left each state to have got the ability to make their own rules, right, on how they want to structure their online betting market. So, but there's a caveat there, in that there's something called the Wire Act in the US, right, which makes it illegal to do sports betting, across state lines. So what that means is that, let's say you are a resident of California, right, a company that is based, let's say, in New Jersey, can't take bets from residents in California. So what this means essentially is that we are going to have 50 markets essentially, right? So if a company is based in New Jersey and they want to expand to, let's say, California, they have to apply for a license in each state. So that's almost how the market is being structured. So what this means essentially is that we expect so many different players in so many different states, and also because each state is coming up with its own rules. There won't be like a uniform market in terms of how the landscape is. So what companies are doing, right, just to give some general context, is in the US, you have got two types of market. You've got the first tier markets, which are your large gambling market. We're talking about New Jersey, we're talking about New York, we're talking about California, I think Pennsylvania and Indiana. So those are your huge sports betting market. And the big players within the sports betting are applying for licenses in those markets. We have Flutter Entertainment here in Australia. We have PointsBet that has been also been partnering with NBC, and they're applying for. And I think they were awarded a license to operate in New York. So these top tier markets, that's where you see most of the competition, because most of the big sports betting companies are going into those particular markets. And then you've got what we call second tier markets. These are relatively smaller markets, but they also have got quite a sizable they're quite sizable in terms of smaller sports betting companies. So these are the type of markets that BlueBet is going after. And right now, we're talking about Maryland, Virginia, Iowa, those type of markets, right? So if you're a DraftKings or if you're a Flutter, to go to Iowa, the market might not be big enough to really like impact your bottom line, because you are quite significant. So you rather concentrate your effort in terms of winning and operating in California or New York or in Pennsylvania. But if you're a company like BlueBet, their go-to-market strategy is really to target those second-tier markets, where you have got traditional casino or traditional gambling companies that were operating in those markets. And for the last, I don't know, maybe 50 or 100 years, these were brick and mortar type of gambling companies. And what BlueBet is wanting to do is to go into those markets, right, and then partner with those gambling companies that already have got licenses to provide sports betting, And then what they do is they want to provide the technology, right, behind online sports betting. Because if you look at how the product works, you've got the front line, which is where customers put their bets, and then you've got the technology behind, where they do pricing of the lines and they come up with the odds. So it's the technology behind, which is extremely difficult to do when you're offering an online service. And that's what BlueBet is trying to do: partner with the traditional gambling house and then offer that technology at the back end.
It's really smart, mate. I really love that idea because there are some things you can do locally really well, and there are some things that you need scale to do really, really well, like provide, as you say, betting technology. We're seeing the same thing in US companies, for example, in regards to identifying the creditworthiness of potential borrowers. And if you're a single bank, you might know your market really well. You might know your specific customers really well, but you don't get the value of the scale to do that. And I guess, and I'll don't put words in your mouth, but it seems to me, as you describe it, the little lights are going off in my head and thinking, you know what, this is great. We're seeing a business that said, well, look, I'm not going to be the expert in the Ohio market or in the Rhode Island market. But what I do know is I can provide this technology, which is eminently scalable, has a lot of expertise behind it, hard for them to develop, hard for me to get into the market. Yes, we'd all like to be everything to everybody and make all this money, but if I can make a lot of money rather than a huge amount of money by simply doing what I do really well, it's an easier path to market. Smart for the partner because they want to stay relevant. Smart for BlueBet because they don't have to create that presence. Super smart. Mate, so you've talked me into it already, which is great. Anything else about the investment case that we particularly like about BlueBet?
Well, I think Scott, you really nailed it because so one big caveat that we are seeing in the US market, if you look at Flutter, if you look at DraftKings, right, is that the cost of customer acquisition in the US is extremely quite high. So most of these companies, they burn a lot of cash trying to acquire customers. And one thing about sports betting is that there is no really loyalty to a particular brand. People place bets depending on who is providing the best pricing for any particular sports event. So there's not really a brand loyalty. So the cost of customer acquisition is extremely high. So if a company like BlueBet wants to go into the US market, for them to establish a brand or a presence is going to cost them quite a fortune. But however, if they partner with a local gambling company that has been operating for the last 100 years, let's say in Iowa, or let's say in the state of Virginia or Maryland, they don't have to invest in terms of establishing presence. But these companies, because they've been operating and they know how to, they've got the physical infrastructure and presence, what BlueBet is doing is to help them do that migration from in-person sports betting to online sports betting. And then they provide the back-end infrastructure or the back-end technology to enable these guys to do it. So I think it's a much more superior value proposition. In terms of BlueBet, they have to spend much more money in terms of developing and refining their technology stack, and not in terms of customer acquisition, which is extremely expensive.
Beautiful. You specialize in what you're good at. It makes perfect sense to me. Now, you've done a nice job. You've talked me into it, so that's great. Before we do that, before you talk me into it entirely, share with me some of the risks, share with our viewers and listeners, more importantly, some of the risks of investing in a business like BlueBet. Feels like a young company, feels like a smallish business, feels like there's lots of potential, but also some execution risk and maybe just a truckload of competition. What are some of the risks when it comes to BlueBet?
Well, I think the top three. Number one, I think you said it rightly. Number one is execution, right? So BlueBet has got a history of executing here in Australia. I mean, they have grown their market share from almost zero when they started in 2015. Right now, they are sitting somewhere close to 1.5%. So they've got some bit of traction in terms of executing here in Australia. But again, there's question marks whether they can do that within the US market. It's also quite new, and they're also a very small company. So that's the first one. The second one is gambling is a highly regulated area. So if there is any form of if they are partners, right, or if they're involved in any form of litigation, that will really result in some significant cost for BlueBet and for all the other partners. In the US right now, they've passed a law that makes it extremely highly regulated industry. So that's one thing that we always have to keep an eye on. And lastly, like you say, there's so much competition in the US market. But what I like about the competition is it's extremely localized. So companies, when they are competing for a New Jersey license, that's what you're competing for. There's nothing called a US license. It's a state by state type of competition. So they have to really figure out which states they are going to. Right now, they've lost one of their target states. They failed to secure a partnership license there. So now they are left with, but they've also secured one. So they have left with 3 more states to go. So it really comes out to if they are able to secure a license in all the 3 remaining states that they are targeting. It's extremely difficult to know like in advance, because some of the rules might, might be beyond their their control. So those are some of the key risks for this particular investment. It's a small company. It's entering a new market, but there is an enormous opportunity if they get it right.
Does sound like a wide range of outcomes, mate. If things go really, really well, it looks like lots and lots of upside. If they were to lose all 3 of those bids, I imagine the shares might even be overpriced now, and then you've got to try and work out some sort of ratio from here to there in terms of what that might look like. Before I get you to sum up the investment case, mate, I'm going to just do a quick ad, as I like to do. You can follow Trevor, dear viewer and dear listener, on Twitter, and you should. He's a smart guy, got lots of great stuff to say. Is it Trev Muchedzi? Am I right about that, Trev?
That's right.
At Trev Muchedzi. There you go. If you want to follow me, you can do that at TMF Scott P on Twitter or Insta. You can follow the Motley Fool at the Motley Fool AU on both those platforms as well. Follow me on Facebook with Scott Phillips Money, and you can follow, of course, the Motley Fool at the Motley Fool Australia on Facebook. If you're listening to this on the podcast, thank you very much for doing that. While you're there, why not subscribe to The Good Oil with Scott Phillips? I know I've got to talk about myself in the third person. It's very uncomfortable. The Good Oil with Scott Phillips is our brand new podcast, only 9 episodes old, a new one due any day now. So make sure you go and jump on that one. Some really great conversations with some really, really interesting people, normally in business, investing, finance, tech, the kind of area that you're hopefully interested in. And hopefully we're bringing you some great conversations. And of course, check out our YouTube channel. Just go to YouTube and search for the Motley Fool Australia. Like and subscribe if you wouldn't mind. Hit the notification bell so you make sure you get the good stuff. And of course, if you're watching on YouTube, thank you for doing that. Please do subscribe while you're there and jump on the podcast, Motley Fool Money and The Good Oil with Scott Phillips. It's all free. It's free from the Motley Fool. You get great, smart people like Trevor Muchedzi, plenty of other people, and occasionally me, sorry. But you get lots of other great, smart people who are worth listening to and paying attention to. So why wouldn't you? Why wouldn't you do that? All right, mate. So give us the elevator pitch, the first floor to the 31st floor. A business with lots of potential, lots of, well, a bit of risk. Tell us the BlueBet investment story in about 60 seconds.
Yes, Scott. So the investment story is very simple. The US market is really, really a new market, and it's enormous. It's expected really to really grow to something like between 20 to 30 billion dollars in terms of revenue over the next 3 years only. So this is a significant and huge market opportunity that BlueBet is going after. And also, I really like their sportsbook as a service offering. It's really like a software type of business model where they don't have to invest significantly in terms of customer acquisition, but really the unit economics, if they get it right, if they get into these transactions, they are really, really compelling. So it's an investment opportunity that I think is worth looking into. But obviously, like you said, we have to pay attention to the risks, and let's see how they're executing over the next few quarters.
Beautiful. This is typical of the sort of business that Trevor and Kevin bring their members at Motley Fool Extreme opportunities every single month. BlueBet is the company that Trevor is bringing you today. The code is BBT. I didn't say that at the very beginning, so let me do that. BlueBet, BBT on the ASX. Higher potential risk, but a higher potential return to go with it. If that's the sort of company you're looking for, Trevor has brought you an absolute beauty. Trevor, thank you for spending some time with me. Of course, thank you for spending your time with us. We appreciate it. We know there's lots of other things you could be doing. We appreciate you spending a little bit of time with us. Until next time, from Trevor, myself, and the whole Motley Fool team, full on.